Hey, Gen X guy here. Another day, another walk and talk video. I think I call these walk and talks. That's what I do, so figured I'd come up with a name for it. Walk and talk. Sounds good, so we'll roll with it. So today's video, we're going to talk about the SEC / requirements for spot Bitcoin ETF applications. This just came up. We found this out within the past 24 hours. What does this mean? Well, before I explain, if you would, like the video, subscribe to the channel if you would, please. It helps me grow the channel, which is doing well, by the way. So I appreciate all the love and help, and let's keep it rolling. I'll try to help you guys out, share my knowledge with you, and if you've got any questions, you want my opinion on something, I'd be glad to share it. So let's talk about these new SEC requirements. We already have Bitcoin and Ethereum ETFs. They've been around for over a year now, and they've been very successful. As a matter of fact, the Bitcoin ETF, or ETFs, there's multiple of them. I think there's about 12 of them, I guess. At this point, they've broken the records of all ETFs in history. And there's been lots of inflows. They're huge. I don't have the exact number, but it's in the billions, several billions. And then the Ethereum came out as well a year ago, and they've done well. And so I think with the success of that, the investors in the more of the TradFi, traditional finance, the stock market, ETF, those type of investors have really become attracted to those ETFs. Since then, there have been 92 applications that have been filed with the SEC for other crypto assets to create ETFs. And so those application filings have been in the process for a while. The way it works is they'll file these applications, and then there'll be certain deadlines along the way. And most of these applications were filed during the previous administration. And that previous administration was not very crypto friendly at all. And so they pushed these applications delay until it became inevitable that they needed to, the deadlines came, and they ended up approving the Bitcoin and Ethereum ETFs. Well, since then, we've had several of your more larger cap cryptos become, they've filed for applications to get those as ETFs as well. And so analysts are predicting there's going to be a wave of new ETF listings that are going to come up because of the new administration is pro-crypto. They want to see that. And what's interesting about all of this is we're seeing a merge or convergence of TradFi with the crypto space, in the crypto space with the TradFi space. So we're seeing a lot of traditional assets going on chain that you can trade on chain. And we're also seeing that a lot of crypto assets are now going into the traditional finance space, into the ETFs. So we're witnessing a convergence of both spaces coming together, and eventually they'll all be one. And I think you'll see it just merge into blockchain technology because it just makes sense. So you'll see the NASDAQ, and you'll see a lot of these exchanges, they'll eventually just go on chain. That's where it's all headed. And this SEC is facilitating that in rapid speed. So what are the new crypto assets, digital assets that are in application process now that we could see come the ETFs hit at any moment now that they've brought these new generic guidelines to the forefront? They are Bitcoin, Ethereum, XRP, Solana, Bitcoin Cash, Cardano, DOGE, Litecoin, Chainlink, Stellar, Avalanche, Shiba Inu, Polkadot, and Hedera. And so I think if that's not all of them, it's most of them, at least the ones that matter the most anyway. So all of those are in the pipe. And so I think what you're going to see now that they've changed these rules, you're just going to see them all just come out at once, and it could happen at any moment. They were thinking October and then November, but now I think the SEC, instead of having all these applications and reviewing one at a time, it's just burdensome. So I think they just said, you know what, we've got to come up with a process to where as long as you follow these rules, it's almost like you could just start your own ETF, and so without going through all this crazy filing process. So, and that's good news. That's great. And that's going to bring a lot of your more TradFi investors, your traditional investors that aren't familiar with wallets and trading on chain, and are not familiar or want to open a Coinbase account or a Kraken account and buy these cryptocurrencies or digital assets on your newer exchanges. They want to do it in a TradFi, especially your baby boomers, your boomers, and even some of your Gen Xers. They're already in there. Their retirement money's there. It just makes sense for them. And I have the Bitcoin ETFs and Ethereum as well. So and I also have obviously the assets that I buy through exchanges and wallets and things like that as well. So I have all of it. So what you're going to see is a lot of the digital assets, the crypto investors are going to start front running these ETFs coming out, because they know that opens up a whole new market of investors. Your TradFi investors are going to be buying these things. So the SEC's new generic listing standards, it really could double the amount of crypto ETFs that we see in the next 12 months. This is really, the stars are aligning. If you haven't been paying attention, you probably need to. We are seeing a massive shift in TradFi to the digital age of finance, and you're starting to see traditional finance move on chain, real world assets move on chain. A lot of these, your Apples, your Teslas, you can trade that stuff on chain now. I don't think you can do it in the United States, but other outside the U.S. they can now trade those. And there's like Ondo is facilitating that, and we could talk more about that later. But things are changing, guys, really, really fast, and it's great. It's good. I mean, this has been a long time coming, and this is the new Gen Z, the Gen Alpha. They're going to be using this technology every day. It's here. I'm a Gen Xer. I've embraced it, and my kids are both Gen Z, and I tell them every day, and they're invested into Bitcoin and some of these assets that I talk about and will be talking about. So Gen Z is they're going to be transacting with this stuff on a daily basis, as well as your new Gen Alpha that's coming along. So I know we may resist it. And then also, too, you got to keep in mind that the baby boomers control about 2/3 of the wealth in this country. That's a lot of wealth. And the baby boomer generation is slowly leaving us. And so that wealth transfers. It goes to the X's, and then it goes Gen X's, and then it goes to the millennials, and it goes to the Gen Z. So we're going to start seeing that accelerate as the baby boomer generation starts to decline. And I think we're already starting to see that happen. So anyway, guys, I think it's great, these new generic rules to streamline the process. And say deregulate it, if you will. It just makes sense, common sense. As long as you're following the rules and you're not breaking the law, I'm good with it. I think it makes sense. Look, crypto's the future, guys. Digital assets, it's here to stay. It's not going anywhere. It's not funny money. It's not funny, it's just magic internet money. No, it's not magic internet money. It's real. It's coming. And matter of fact, if you've got most of the banking stuff, the traditional banking that we do now, the reality is most of that's digital. We're using less and less cash now. There was a time during the pandemic that you couldn't even use cash. So, and I know there's a big group of people out there that think that's the worst thing. Is, oh no, they're tracking everything we do. We want to use. We want to be able to use cash. Well, I hear you, but and I get that. But it is what it is, and we're in a digital age now. It consumes us, and so we carry phones in our pockets, and if we can transact, and you know, such boomers and Gen Xers, you know, that's kind of our mindset. But these millennials, and more so the Gen Z, the Gen Alpha, they don't care about all that. They want to use the tech. They don't have time to slow walk things. They want to get it and go. So this is exciting news, guys. I'm going to start, you know, kind of focusing this channel on more of the news around the crypto space and what's going on, and give you my thoughts and opinions on it. You know, I've been in this space for going on 5 years now. I love it. It's great. I've got a lot of knowledge that I can share with you. If you're a Gen Xer like me, and I know there's a lot of them out there, I've had them tell me, friends of mine, that like, man, I don't understand it. I don't get it. It's just complicated. Well, I'm here to uncomplicate it and try to help you understand it bit by bit, piece by piece. It's not going to happen overnight, and you got to crawl before you walk. You got to walk before you run. And so you're not just going to get all this in one video. So if you would, just, you know, subscribe to the channel, like the video, support me, and I'll keep giving you this content. And if you have questions or you don't understand something, leave a comment down below. I'll respond to it. You know, this channel is something I really want to dedicate a lot of time to help you. And not only just this, but I've got 20 years in real estate. I've been messing with finance now for a lot of my life. And as you know, I invest in high-risk assets, and it's done me well. And so if I can help you kind of figure things out, and of course, none of what I say is financial advice. You need to do what you feel comfortable with. But if there's something that, you know, that I, you know, can help you with, or you men on the fence about something, and you're like, you know, that's what I'm gonna do. That makes sense. Then, and if it works for your risk tolerance and what you want to do, then by all means, go for it. So, but anyway, like the video, subscribe to the channel. I appreciate all the support. The channel's growing. Thanks for your time, and have a great day. Gen X guy out. See you. Bye.